This is Hajirunnisa, Assistant Professor of Commerce and Management Department, would like to deliver a lecture on International Financial Reporting Standards. International Financial Reporting Standards are the globally accepted accounting standards issued by International Accounting Standard Board. They explain how different types of business transactions and events should be reported in financial statements. They also include guidelines and interpretations approved by International Accounting Standard Board. The main objective of IFRS is to make international comparisons as easy as possible. They are required because companies have become global. They make investment and conduct trade throughout the world. IFRS are becoming the global language of the business and are very useful in making international comparisons of companies which are global. International Accounting Board was set up in 2001 to develop international financial reporting standards. It means a principle-based accounting standards drafted comparatively simple and clear language than most of our accounting standards. The term IFRS has both narrow and a broader meaning. Narrowly, IFRS refers to the new numbered series, whereas broadly speaking, IFRS refers to the entire body of International Accounting Standard Board, including standards and interpretation approved by the International Accounting Standard Board, International Accounting Standard Committee, and Standard Interpretation Committee. The difference between IFRS and Indian accounting standards are IFRS are based on principles contrary to the Indian accounting standards, which are based on rules. Preference shares are shown under the head share capital, but IFRS requires that they should be shown under the head loans. This is an example of principle based and rule based. So under Schedule 3 of the Companies Act, redeemable preference shares are shown under the head share capital, but IFRS requires that they should be shown under the head loans. So the second point of difference is IFRS are based on the concept of fair value, but Indian accounting standards are based on the concept of historical cost concept. And the third difference is the Indian environment and global environment are different, which leads to a huge gap between accounting standards issued by Institute of Chartered Accountants of India and IFRS issued by International Accounting Standard Board. So to bridge the gap between accounting standards and IFRS, Institute of Chartered Accountants of India issued Indian accounting standards converged with IFRS. And the next topic is features of IFRS. The main features of IFRS are as follows. Number 1, IFRS are principle based accounting standard as compared to rule based accounting standard as in the case of Indian accounting standards. And the next point is IFRS are drafted in a clear and simple language and are easy to understand and apply. Next is IFRS